The global economy. The very phrase can conjure images of impenetrable complexity, a daunting world of stock market tickers. This feeling of complexity, however, masks a simple and profound truth. The global economy is deeply intertwined with the fabric of our everyday lives, influencing everything from the price of our morning coffee to the security of our jobs. Ignoring it is like trying to navigate the ocean without understanding the tides or the currents. Therefore, understanding how this global machine works has become a practical necessity for modern life. It empowers you to see beyond the bewildering headlines and make sense of the forces shaping your world. Our goal is to demystify this subject entirely. This journey is about providing you with a clear map to navigate a world that can often feel chaotic. Economics is better understood as a story about people. It is a story of human needs, desires, fears, and innovations on a global scale. The global economy is simply the sum of all the interactions that happen between individuals, businesses, and governments across the world. Think of it as a living, breathing organism with key organs and pathways. This essay aims to provide a simple framework for understanding this organism, focusing on foundational principles. We will explore the 5 primary engines that power this global machine: production, consumption, trade, debt, and currency. By examining these core drivers, you will gain a clear sense of the fundamental forces that shape economic headlines. The purpose of this exploration is not just to inform, but to empower you with a lasting mental model. To understand the global economy, imagine the world as one colossal, interconnected machine. Not made of steel, but of billions of human actions. Every purchase, factory built, or infrastructure investment activates a part of this machine. It's a system exchanging goods, services, and money, linking lives globally. Operating 24/7, countries produce, trade, borrow, lend, spend, and save. These activities are the gears driving the global economy. Consider a smartphone. Materials from Africa, manufacturing in Asia, designed from North America, assembled and shipped globally. This illustrates the machine's complexity. It's not isolated economies, but an integrated system where one part's actions affect all. Understanding this interconnectedness is key to understanding the global economy. It's one machine with many parts working in balance. The global economy is a vast web where every country, business, and individual is connected through trade, finance, and information. A farmer in Brazil is connected to consumers in China. A software developer in India is connected to a tech company in Silicon Valley. These connections create a system of mutual reliance. Trade allows countries to specialize and access a wider variety of goods. Finance involves capital flowing across borders. Supply chains are logistical networks moving materials globally. Consider the automotive industry. A car may have parts from Germany, Japan, and South Korea, assembled in Mexico before being sold in Chicago. Disruptions can halt production, demonstrating interdependence. Economic prosperity and pain are shared. In this system, the fortunes of nations are linked. The global economy is deeply interconnected. Actions create a ripple effect, spreading outwards. These ripples can grow into massive waves impacting the entire world. A decision by a central banker, a policy shift by a government, or a technological innovation can trigger a chain reaction with consequences felt globally. Understanding this ripple effect is crucial to grasping how the global economy functions. A single policy decision affects currency values, trade balances, and debt levels across the globe. This illustrates the ripple effect, where one event sets off a cascade of consequences. Recognizing these effects helps us see that we are all part of a single economic story. If the global economy is a giant orchestra, then central banks are its most powerful conductors. Institutions like the US Federal Reserve, the European Central Bank, or the Bank of England wield immense influence. Their primary role is to manage a nation's money supply and control the cost of borrowing through interest rates. They maintain economic stability, keep inflation in check, and promote sustainable employment. The most critical tool is its benchmark interest rate. When the economy is overheating, the central bank will raise this rate. Conversely, when the economy is sluggish, the central bank will cut interest rates. During major crises like the 2008 financial meltdown or the 2020 pandemic, central banks have gone even further. The decisions of major central banks have profound international consequences. Governments write the sheet music and set the rules. Through taxation, spending, and regulation, governments shape the economic landscape. They provide public services, build infrastructure, create social safety nets, and set the legal framework. Fiscal policy involves spending and taxation. Governments inject money into the economy by funding projects. By raising or lowering taxes, governments influence economic behavior. Tax cuts encourage spending, stimulating economic activity. Governments wield power through regulation, setting rules from environmental protection to trade. These rules shape the playing field, guiding the actions of every player in the economy. With over 190 countries, each with its own economic interests, there needs to be referees to establish common rules. International institutions like the International Monetary Fund, the World Bank, and the World Trade Organization play this crucial role. Created post-World War II to foster global economic cooperation, they act as vital pillars, promoting stability and facilitating trade. The IMF ensures monetary stability, providing emergency loans with strict reform conditions. The World Bank reduces global poverty by providing loans and assistance to developing countries. The WTO negotiates trade agreements and resolves disputes, ensuring smooth trade flows by lowering barriers. Together, these institutions provide a framework for the global economy, managing relationships between nations. While central banks, governments, and international institutions set the rules, the real action is driven by consumers and businesses. Economics is the study of human behavior, the collective decisions of individuals and firms. Every choice you make sends a signal, influencing what is produced, where, and at what price. Consumers are the ultimate source of demand. Businesses respond to consumer demand by organizing labor, capital, and raw materials. They produce the goods and services we use. Their collective activity, business investment, is a critical driver of the economy. The interplay between consumers and businesses is the heartbeat of the global economy. At the heart of the global economy lie production and consumption. These forces create a continuous cycle that drives economic activity. Production is creating goods and services, from products like cars and computers, to services like software development. Consumption is the act of using those goods and services, driven by the needs of billions. Every time you buy groceries or get a haircut, you participate in consumption. Consumption is the largest driver of economic growth. The relationship between production and consumption forms a self-reinforcing loop. Production creates jobs, providing income to consume goods and services, encouraging businesses to produce more. This cycle is the basis of economic growth. A breakdown on either side can disrupt the entire system. These twin engines are the pillars upon which all economic activity is built. Trade is the engine that links nations, allowing them to specialize and exchange what they do best for what they lack. No country is self-sufficient. Trade lets Saudi Arabia swap oil for Brazil's food, for example. Imports and exports create a global web of relationships, shifting power and shaping economies. Trade surpluses, like China's, strengthen economies, while deficits, like the US, can create vulnerabilities. Global supply chains mean products cross borders multiple times, making economies efficient but fragile to disruptions. Governments use tariffs and quotas to protect industries, sparking trade wars, while free trade agreements aim to lower barriers. The tension between protectionism and free trade shapes the global economy and the flow of goods worldwide. Debt powers growth, letting families buy homes, businesses expand, and governments invest in infrastructure. Governments borrow by issuing bonds, creating national debt. What matters is their ability to repay. Strong economies like the US can handle large debts due to global trust and low interest rates, but too much debt, especially in foreign currency, can lead to crisis, and even default, as history has shown. The global financial system is a web of debt. Banks, countries, and investors are all interconnected. A crisis in one area can quickly spread, as seen in the 2008 financial meltdown. Managing debt wisely is crucial for global stability and prosperity. Currency is the medium that makes global trade possible, with each nation's money constantly fluctuating in value. Exchange rates impact trade. A weak currency boosts exports but raises import costs, while a strong currency does the opposite. Policymakers must balance these effects to maintain competitiveness and control inflation. Some countries are accused of manipulating their currencies for trade advantage, fueling international tensions. The US dollar dominates as the world's reserve currency, used in most global trade and held by central banks everywhere. This gives the US unique economic power and stability, but also makes the dollar's value critical to the world. Currency movements shape economies, trade, and global finance every day. The stability of major currencies underpins the entire global system. The global economy's interconnectedness brings efficiency and vulnerability. A crisis in one country can trigger a domino effect, spreading panic and disruption worldwide. Financial markets transmit shocks instantly, causing credit crunches and freezing economies. Disruptions in trade or supply chains ripple across continents, leading to shortages and job losses far from the source. Confidence is key. Fear and uncertainty can turn local problems into global recessions. The system's strengths become weaknesses in times of crisis, as seen repeatedly in recent history. Our economic fates are more intertwined than ever before. The 2008 financial crisis began with risky U.S. mortgages, but quickly froze the global economy, revealing the dangers of financial interconnectedness. Banks collapsed, credit vanished, and millions lost jobs worldwide. A decade later, COVID-19 shut down the physical economy, breaking supply chains and causing shortages everywhere. The pandemic exposed the fragility of our just-in-time global system and dependence on free movement. Governments responded with massive stimulus to prevent total collapse. Both crises showed that global systems, financial and physical, have fault lines that can rupture unexpectedly. These events remind us that global prosperity depends on resilience as much as efficiency. As the world economy recovers, new uncertainties have emerged. The period from 2022 to 2024 has been defined by interconnected challenges. The global surge in inflation, after years of low prices, was triggered by pandemic disruptions and massive stimulus. Too much money chased too few goods, causing prices to skyrocket. This forced central banks, led by the Federal Reserve, to aggressively raise interest rates, ending an era of cheap money. While necessary, these hikes increased the risk of global recession. Compounding these issues is geopolitical instability, notably the war in Ukraine. This conflict is a major economic shock. The war and sanctions disrupted critical supplies, causing energy and food prices to surge, fueling inflation and threatening food security. The conflict highlighted how geopolitical events can weaponize economic dependencies. These events force a re-evaluation of the global economic model. Efficiency is now weighed against resilience and security. Countries are considering reshoring or friendshoring to reduce dependence on rivals. The system is being reshaped by these fault lines. The era of smooth globalization has given way to a more fragmented and volatile world. The global economy's vast machinery directly impacts your life. When the global economy booms, companies hire and expand. A slowdown can lead to cuts, impacting your financial stability. Global factors influence grocery prices. A drought in Brazil raises coffee prices. Currency values affect import costs, impacting your budget. Your investments are tied to global markets. International events can significantly affect your portfolio's value. Major decisions like buying a house are shaped by global forces. Interest rates are influenced by central bank policies reacting to global trends. The global economy shapes your financial choices daily. Understanding the global economy empowers you to navigate your financial life with greater confidence. When you see the connections between headlines and their impact, you move from being a passive spectator to an informed participant. This knowledge allows you to anticipate challenges and opportunities, helping you distinguish between short-term market noise and long-term shifts. This understanding is your best defense against financial anxiety. By grasping the engines of the system, you gain a framework for making sense of the chaos, replacing powerlessness with clarity. An informed public is essential for holding policymakers accountable for decisions that will shape the economic future. Ultimately, learning about the global economy is an investment in yourself. We've demystified the global economy, transforming it into understandable parts. The world is interconnected. Decisions in one place ripple across the globe. Key players include central banks, governments, and institutions like the IMF and World Bank. Consumers and businesses drive demand and supply. Core engines include production, consumption, trade, debt, and currency. This framework simplifies complex jargon, revealing the logic behind economic headlines. It explains system breakdowns like the 2008 crisis and COVID-19 supply chain shocks. It's a practical tool impacting your job security and retirement. This exploration is a starting point. The economic story is constantly evolving. Remain curious, read and ask questions. Economic literacy is continuous. Make informed, rational decisions. Think critically. It's empowering. A financially literate society is more resilient. Speak a common language to solve shared challenges. We're committed to helping you stay informed. Understand the world and your place in it. Understand the world to help shape it for the better.